I want to shift and talk a little bit about the environment and markets and the economy right now, but let me ask you just first of all, how dependent is your model on the cycle?
Our goal is to make it not dependent. That's why we're so diversified. I think being diversified, really helps us ride out the cycles. And, I think that, with the stability of our funding base is so predictable, right? So, I think that the combination of being very diversified, not having event risk in the model, and then having a really good funding base, and a really good financial capital partner, with me, really gives stability to the platform.
But don't you take advantage of market conditions?
Oh yeah, I mean that's part and parcel. And if you look at, what we did, in March and April, the very first thing we started buying when the pandemic hit, we were buying AAA CLO bonds at 85 cents on the dollar.
This is 14 months ago.
Yeah, sorry,
Right.
14 months ago. So when March of 2020, when the world started really gyrating, we had opportunities. We were buying CLO AAA bonds at 85 cents on the dollar, right? So when you kind of work through the math of what does that mean, right? Generally, you look at these secured loans, and they sit at the top of the capital structure, right? So they're the first thing to get paid off when the asset is sold. They've got change of control protection, so they're very well situated. And they're 50 cents of the value, let's say. And so when you kind of bundle them all up, and then the AAA tranche is 65% of the 50%, and then when you can buy it at 85 cents on the dollar, you're kind of creating senior risk that's baked 20%, 25% LTV, let's say, at very low levels at nice prices because you were able to buy it at a discount. So, when we worked through all of this, that was the first thing we saw. And then all of a sudden, you had the loan market start to kind of trade. Because what really happened is trading activity ceased. Right? The velocity of money stopped moving, right? And people started staying home. So everything dried up, and then people started figuring out, okay, well, how am I going to replace my velocity? So they then started selling assets. Right, and if you're well positioned, to be taking advantage of those types of situations, we bought senior secured debt in Chuck E. Cheese and Cirque du Soleil. We bought LPQ, and we went deeper on fintech and digital, and so I think if you look at what we put to work over the course of the last 15 months, we probably bought over $3 billion of credit, and we probably sold over half of that already. But we also then found a bunch of investments where we can convert the debt to equity, and then we also found things like Stash and PayActive and kind of fintech businesses that we think are really well positioned around our themes.